Mr. Stansby, you have given a masterclass today about global trends in equity markets. What is, according to you, the difference between a trend and a hype?
I think it's very easy to get focused on the short term when investing in equities. And that's often what leads you into very fashionable, often very cyclical, short-term issues. And I don't think that's a good long-term investment. Much more important to try and identify sustainable 5 or 10 year powerful global changes that are taking place. You're much more likely to have successful investment if you can identify those than just simply what's done well over the last 12 months. So often you need to think longer term and be more progressive in your thinking.
Yeah. How do you recognize a trend?
Very difficult. Because most people only recognize them after they've happened. I think if you do look forward and you do recognize the major changes that can take place, particularly changes that can take place in more than one location, and they may be technological changes, they may be patterns of consumption, they may be changes in the way that the economy is shaped. I think if you can identify those and really understand how in 5 years' time the world could be quite different from it is today, then you're more likely to identify a trend. So you need to look forward rather than looking backwards at what's worked in the last year or so.
And what are, according to you, the major global trends for the next 10 years?
For the next 10 years I can see 3 changes. I'm sure there will be more, but I can see 3. The most obvious one is the shortage of natural resources that the world has. Supply and demand is still not in balance, and the main reason for that is that we're just not finding any new sources, and we're not likely to, and therefore demand is strong, supply is weak, and therefore prices go up. The other one is the move that the world's population is making to the cities. That's requiring completely different infrastructure, and large investment projects are taking place to satisfy that. And then the final one, possibly the most controversial one, but probably the most powerful one, is the rise in the consumer. In the Western world, the consumer markets are very poor, very depressed, but yet the whole world is not like that. And the key change to keep world growth going is for many of the large economies in the emerging world to develop their consumption and have more consumer spending to back up their economic activity.
So if you want to profit from private consumption in emerging markets, should you buy Western companies that are working in these markets, or is it better to invest in emerging markets directly?
At different times you might do different things. At the moment, with the Western consumer very depressed, many of the large and very successful and well-managed consumer companies in the Western markets are exploiting that growth in the emerging markets. So they have addressed the problems and refocusing their business, and the price you pay for them does not yet fully reflect that. And again, that's probably the key issue for investment, is we're not paying a very high valuation for an emerging market company if we can buy a Western company that has maybe 30 or 40% of its sales in emerging markets at the moment and growing more rapidly.
Are you saying, in fact, that there might be an asset bubble in emerging markets?
No, I don't see a bubble. I don't see the kind of euphoria. What I'm thinking is that actually today the more attractive opportunities are somewhere else. If you looked at the past bubbles and looked at the characteristics of them, there's far much more euphoria. Many investors just today, as we've listened, don't have exposure to emerging markets. The time to be worried about a bubble is when everyone you talk to has lots of investment in emerging markets. I don't think that's the case today. But the prices that one pays are still quite high. But I think they can be justified, but only on 3 or 4 years, whereas we don't have to pay those prices to get exposure to the emerging markets, and that's maybe the real opportunity today.
And maybe one last point. What about currencies? It seems to be that the dollar, people are worrying about the dollar, about the euro. People are saying that the Chinese currency should be stronger. What is your view on that?
I think this is very much linked into these issues we've talked about. Looking forward 3, 4, 5 years or more consumption in China, more domestic demand will naturally lead and be associated with a stronger currency. The days when China simply underpriced and undercut using a cheap currency to gain market share in manufacturing is largely, I think, behind us. What we're like to see in the future is a slowly appreciating currency and a stronger consumer in these countries, not just China, but in other parts of the world as well.
Yeah. So you are not afraid of a trade war between the United States and China?
I don't think it's in anybody's interests. I would be afraid if it happened, but I don't see either America or China wanting to start that situation. A little bit of tension is probably a good thing between those two nations, but I don't see a trade war coming.